Morning people, hope I'm audible. So today what I'm going to do is I'll first finish off all the questions what are there in the recent RTP released by ICAI. Let's do a full quick review about the questions which are given, and then we will move to other aspects as well. So if you look at the RTP which is given by ICAI, they have given couple of notifications specifically for this attempt, stating that you are supposed to go through your new schedule 3 whatever is given. A couple of changes, of course in our classes we have already discussed this, so that schedule 3 is what you are supposed to follow, is what is given, so that alone you need to focus upon. And then moving forward to the questions, the first question is about preparation of financial statements, where you are given the trial balance and other information is given for us to prepare financial statements. So I'm sure you will be able to do it, but I would quickly run through what you are supposed to do. Okay, so let's quickly run through the given question. Okay, inventory opening balance is given, raw material and finished goods both would be considered in trading account, that is your raw material consumed. You would use this opening inventories and closing inventories to calculate your raw material consumed. And then you have purchase of raw material, this also you would use in your preparation of cost of material consumed. Manufacturing expenses would be shown next to that, and then salaries and wages would be shown separately as a line item, and general expenses would be shown as others. Other items is what we are going to show. Building, plant and machinery, furniture, motor vehicles, all these are going to be shown as assets. Now you need to check whether depreciation has been charged or not on it. As we read the question, let's understand that. Okay, and then investments are given, current and non-current. You would show them as part of your investments. And then sales, revenue is where you are going to show. Interest is there, you would show it as part of your other income. Okay, profit and loss account, credit balance is there, this is part of your reserves. Share capital, part of your equity share capital. And then long-term, short-term loans and long-term loans are given. You would show them at respective places. And then fixed deposits, short-term and long-term are given. Again, you would show them at respective places. Trade payables are given. Now, you also have trade receivables to the extent of 2,38,500. This would be shown as your receivables in your balance sheet, and cash balance also would be shown in your balance sheet. Now, having said this, from the above balances and the information provided, prepare company's statement of P&L for the year ended 31st March 22 and company balance sheet. He says closing inventory details he has given, saying raw material is so and so, finished goods is so and so. Okay, and then outstanding expenses are given. Now, why are these given for us? We are supposed to create provision or create a liability to this extent, and also we should have a adjustment in our expenses. I hope it's clear to you all.
Yes, sir.
Yeah, 1 second. Then there is interest accrued on securities. What does this indicate? This indicates that there is something accrued but you have not received, hence it is being shown here. So this also you will have to make an adjustment in your P&L and also balance sheet. Okay, and then general charges prepaid is there. This basically prepaid expenses which you are supposed to show. And then provision for depreciation, building 2%, machinery 10%, furniture 10%, motor vehicles 20%. So these respective depreciation you should calculate and take it as part of your P&L. And then current maturities of long-term loans is 1,000 is what he says. Now why did he tell you this is because out of this long-term loans of 21,000, you are going to show 20,000 as long-term, and this 1,000 which will be settled in next 1 year's time will be shown as short-term. That's why he has given you that differentiation. He has asked you to make it as an adjustment there. And then tax provision is supposed to be done for 40% of the net profit is what he has stated. We will calculate it, then take. Okay. So having explained about what we are going to do, let's quickly look through the solution what is given. Yeah. So balance sheet, P&L both are given. So what we will do is we will first look through the notes which are given here and then we will go there. Okay. So to start with notes of your P&L, first important aspect is, yes Kana?
Sir, Abhinaya is waiting for the clearing.
Yeah, I've joined. Fine.
Thanks.
All right. So cost of raw material consumed, the first item he has given here, because in your P&L you would start with your revenue from operations, which is nothing but your sales. Okay, and then other income, it is given as 3,900, and he says in the adjustment 300 got accrued. Okay, to the extent of accrued you have added here, and you would show it as a income or you would show it as a asset in your balance sheet because you are yet to receive it. Okay, then expenses, cost of material consumed 12,64,000. How did we get it? That is what he has given there as a note. Please see. Yeah, opening inventory is 30,000 and purchases are given. Closing inventory is deducted. When you deduct, you get a net amount of 12,64,200. This is what shown there as your cost of material consumed, and then changes in inventory and finished goods and work in progress, everything 13,500 is taken negative. How did that come? So if you look at your opening and closing balance of inventories, okay, you would get the difference. Okay, closing inventory of finished goods is 60,000 given, from which you are deducting opening inventory of finished goods. Net off is 13,500, which is taken here. Okay, so then you would go with employee benefits expenses, whatever are incurred. So look at what expenses are given here. Employee benefits 40,200 is actually given. 4,500 is basically provision which you are creating here. Okay, salaries and wages, he says outstanding is there for 4,500. So to that extent it is added, and 44,700 is what you are taking. And same way other expenses he has done here. Let's finish this off. Manufacturing expenses, it is 2,70,000 plus 67,500. General expenses 16,500 minus 2,490 because this is prepaid. Okay, so all of that put together 3,51,510 is given here. So that other expenses part is this. Now apart from this, you also have depreciation to be taken. You don't have finance cost at all here in this problem. So depreciation and amortization, he has given you percentages. Those percentages are what we use and calculate. So if you look here in sixth note, he has given you depreciation details on building 2%, which is 2,020, on plant and machinery 7,040, furniture it is 1,020, and motor vehicles 8,160. Okay, so all of these four put together is your depreciation which is taken there. Okay, with that your P&L items are almost done. Now from this you are supposed to deduct your taxes. Tax he has specifically stated 40% is supposed to be provided, which is 40% of this 49,050, and then net is basically your profit from your current year's operations. Okay, and to be very precise, there is no discontinued operations and all in this problem, so you don't have to bother about it. You just have continuing operations for 29,430. That's all. Now moving ahead to balance sheet. Balance sheet, we will start with shareholders funds, in which share capital will be first taken. Share capital, it is given in the question saying that it is 3,15,000. There are no changes to it at all, hence that is taken as it is. Reserves, there would be slight change because there is opening P&L which is given for 21,000. Okay, 21,000 is opening P&L, and to that you have added current year profits, which gives you 50,430, and then you have long-term borrowings. So secured loans you have, unsecured loans also you have. Under secured, out of 21,000, 1,000 is going to mature in this current year itself. That is going to be settled in next 12 months. Hence, this has been put into this current liabilities. Okay. All right. And then you have fixed deposits, which is with respect to unsecured loans. You have for the tune of 3,300, all put together 23,300 is what you show as non-current liabilities. And then apart from that, you only have current liabilities, where you have short-term borrowings to the tune of 7,000. So where did you get that 7,000 from? What all are added here? So secured loans, it is already given for 4,500. Unsecured is 1,500, and from long-term borrowings, whatever you have restructured here for 1,000, that is all put together, and it is stated as 7,000 here. Okay. Then, so that is your 7,000. Trade payables, it is given there as 3,27,000. Other current liabilities is given as 72,000. Okay. Now, other current liabilities, let us see what is given there. Yeah. So, expenses payable 67,500 is actually given. But apart from that, you have your salaries payable for 4,500, right? So, those are added here, all put together. Your manufacturing expenses 67,500 and 4,500, both of these put together 72,000 is what it is taken here. Okay. And then provision for tax, already we have calculated 19,620, that is taken. Okay. Now, so all of that put together is your balance sheet total for 8,14,350. Now coming to assets, PPE, we have taken assets which are given in the balance sheet less depreciation. The total would be this. Non-current investments is 7,500. Please see how you got that. So it is given directly, I believe. Yeah, non-current investment 7,500 is directly given to you. So to that extent it is taken. Okay, current investments is 4,500. This is also directly given to you. And then inventories 85,800. This is based on inventories what you have. So raw material plus finished goods put together is given here 85,800. All right. And then you have general expenses prepaid to the tune of 2,490. And interest accrued, which is the income which you are supposed to receive in future, interest receivable to the extent of 300 is given here. Okay, all of that put together would be shown here. So 2,490 and 300. Cash and cash equivalents, it's given in the question. Trade receivables is also given in the question. With that, your balance sheet actually gets over. Okay. Now this is how the question flows. Since it is balance sheet P&L and you are very well aware, I've just run through the answer. Okay. Other questions where it is really important, I'll take you through the question completely and we will solve it by ourselves. Okay. Now let's move forward. The second question is about calculating effective capital. It is given as managerial remuneration, but we are going to understand effective capital. Okay. Now, what does effective capital mean? Effective capital is something which I use for calculating managerial remuneration. What is the percentage we are supposed to pay is something which we will discuss on it. Okay. Now let's read the question and then we will solve it. Authorized capital 14% preference shares for 15 lakhs. equity share capital 100 rupees each, 1 crore 50 lakhs, total 1 crore 65 lakhs, out of which issued, subscribed, paid up is 14,000, 14% preference shares of 100 each fully paid, lakh and 30 equity shares of 100 each, 90 paid up, capital reserve, out of which lakh and 75,000 is revaluation reserve, securities premium 50,000, 15% debentures 70 lakhs, investment in shares and debentures 60 lakhs, P&L debit balance 13 lakh 50,000. You are required to calculate effective capital as per Schedule 5 of the Companies Act. Now, I want you to tell me, would we consider authorized capitals in calculating this effective capital? Is authorized capital considered? No, only issued subscribed capital is considered, so this would not be considered. Next, coming to issued and subscribed capital, would you take everything or would you take only to the extent paid up?
Paid up.
Only paid up would be taken. So with respect to 14 lakhs, can I consider? Yes. With respect to equity, 1 lakh 30 into 100 rupees, it's supposed to be 1 crore 30 lakhs. But I collected only rupees 90 per share. So that's the reason why I have only 1 crore 17 lakhs. So only 1 crore 17 lakhs would be considered. Do you agree with me?
Yes, sir.
Then capital reserve, to the extent it is not cash earned, you are not supposed to consider. Hence, the maximum what you would consider is only out of 2 lakhs, 1 lakh 75,000 would be deducted and only 25,000 would be considered. Okay. Securities premium, I'll repeat. Any reserve which is not cash generated should not be considered for effective capital. Okay. That means here revaluation reserve is not cash generated. It is just based on the fair value of the asset outside. I would increase the value in my books. This is not really something which I have earned, which is not in my hand today. In which case we would not consider this as effective capital. Only the remaining amount would be considered as effective capital. Hence 25,000 only is supposed to be considered. 2 lakhs will not be considered. Is that clear?
Okay, sir. Okay.
Yeah. Next, securities premium, yes, you can consider it in full. 15% debentures, yes, you can consider them. Why? Because this is also being used by you in the business. Okay. And then out of all these monies, you invested in shares and debentures of some other company. That means this money is not being used by you in your company. Hence, you have invested it somewhere else. Hence, you cannot consider this as part of your effective capital. See, what is the logic in calculating effective capital? What is that amount which is being used by the business for the business? If you have made money and you have invested in some other business, I cannot call it as effective capital for this business. Hence, investment in shares and debentures is not considered here. Same way, profit and loss debit balance is there. This is also supposed to be deducted. Okay. So these two items are supposed to be deducted. Okay. And all of these are supposed to be added. Net amount whatever you get is called your effective capital. So can you please tell me quickly what is the value you get? 14 lakhs plus 1 crore 17 lakhs plus 25,000 plus 50,000 plus 78
lakhs 25,000.
50.
58 lakhs 25,000.
All right. $58 lakh 25,000. Is that so small? Seriously? I don't think so. It should be even greater. 14 plus 117 plus 2 plus 0.5 plus 70. Here itself it is greater than 200. It's almost 200, I believe. It would.
78 lakhs.
How much?
Sir, 1 crore 27 lakh 75,000, sir.
All right. I'm trusting you guys with respect to answers. I want you to please tell me correctly. 1 crore
27 lakh 75,000.
27 lakh 75,000.
Yes, sir.
Okay. So you considered 25,000 instead of 1 lakh, 2 lakh rupees, no? Okay.
Yes, sir.
All right. So this is the solution for the second question. Let's move to third
Sir.
question. Yeah.
Sir, it's 1 crore 23,000, sir.
No, if you are, if you have different answers, I'll do one thing. I'll calculate for myself and see. So let me do it for myself then. 14 lakhs plus 1 crore 17 lakhs plus 25,000 plus 70 lakh 50,000
1 crore 28 lakh 25,000.
minus 73 lakh 50,000. Guys, please be cautious. This is not the quality I am expecting for you.
Sir, first calculate the differences of the
I told you, no, it is supposed to be considered. 1 crore 28 lakh 25,000. See, when I am doing it without seeing the answer, you should support me with calculations like this. Alright. So that's the solution. Let's move forward to cash flow statement. I will solve. You also please solve along with me. Yeah, please tell me.
Manager recommendation.
Napa? No, he has asked you only. He has asked you only about effective capital calculation here.
Yes, sir.
We'll do it. See, my objective is to finish off this RTP in this video. Once this is done, we'll do.
Okay, sir.
Yeah. Now, so I'll read through the cash flow statement question. Please see. The balance sheet of Max Limited for the year ended 31st March 22 and 31st March 21 were summarized as follows. Equity share capital, it increased from 1 lakh to 1 lakh 20,000. As you read, please note, when you are in examination environment, you will not find time. This is something which I always tell you in the classroom. First go, you should capture all the important information. No second reading at all. In the first go, you should capture all information, all numbers you should have in your brain. If you are searching for a number, your eye should directly reach that particular place. Okay, you should not take time in reading the question second time. When you read for the first time such large questions, ensure that every point is in your mind when you read. Okay, now equity share capital from 1 lakh it has increased to 1 lakh 20,000. Now where will this fall actually? If no other information is given, what would this indicate? You should tell me.
Issue of share capital.
Exactly, issue of equity shares. That means financing activity. Okay. Reserves and surplus, it increased from 8,000 to 9,000. What does this indicate? If nothing information is given, this is basically profit for the period. Yes or no?
Yes, sir.
Profit for the period. Next, trade payables, from 5,000 it has become 8,000. What does this mean? Where would this give you an impact? Operating activities, financing activities, investing activities. Operating activities. Excellent. Working capital. Next, short-term provisions, from 4,000 it has become 7,000. This also operating activities. Okay. Now, as you read question, you should be able to identify everything like this. That's my request here. Okay. Next, property, plant and equipment, from 58,000 it has become 78,000. What could have happened actually? It would be investing activity predominantly. Okay, we have not gone through everything in detail, but for now understand that it is investing activity. Next, investments, from 28,000 it has become 32,000. That means here also it is an investment activity only predominantly. Inventories, from 8,000 it has become 14,000. That means it is part of operating activity because it is current assets. Working capital changes you are supposed to consider. Trade receivables, from 6,000 it has become 8,000. That means it is also part of operating activity with respect to working capital changes. Cash and cash equivalents, we will use this only for our reconciliation purpose. Beyond that, no other requirement. Good. Next, reserves and surplus, please see. Profit and loss, he says 8,000 to 9,000. That's all. No other information. That means there is no change in your general reserve, no other details given. So what we initially assumed is correct. That 1,000 rupees is nothing but your profit after tax. Okay. Next, provision for income tax is given. 4,000 is your last year provision. This year it is 7,000 he has given. So we will need some more information to define what it is actually. Okay. Next, PPE from 20,000 it has become 19,000. Furniture from 22,000 it has become 34,000. Cars it has become 16,000 to 25,000. That means with respect to building there is depreciation. With respect to furniture there is new asset purchased, and cars also new asset is purchased. Okay. How much we do not know for now. We will read through further. Okay. Next, profit and loss statement is given. He says profit before tax is 8,000. He made our job easy. Why? Because we are supposed to do it under indirect method, for which he has given you the starting point for us. Okay. Income tax provision he has given you 7,000. Now it made me very clear that here you have provision for income tax of 7,000, which is nothing but this year's provision of 7,000. That means last year 4,000 would have already been paid in the current year. Yes or no? Hello? Okay. So that is the understanding here. Next, remaining information, what did he give you? Depreciation on building 1,000, very clear. My logic with respect to what I thought here is satisfied. Okay. Depreciation on furniture and fittings is 2,000. This means my furniture and fittings last year it was 22,000. This year depreciation is 2,000, which means for current year I purchased 14,000 worth of furniture and fittings. Yes or no?
Yes, sir.
Okay, so that is clear now. Depreciation on cars is 5,000. One car was disposed during the year for 3,400, whose WDV is 2,000. There are multiple transactions. Let's prepare an account so that it will be clear for us. Okay, when we go there we will do it. Next, purchase of investment 6,000. This is also very clear for us. Where is investments? Yeah, so from 28,000 it has become 32,000. Please note, investments from 28,000 it has become 32,000, but he is saying investments purchased are 6,000. That means something is already sold, no? Something which is sold I need to find out. Okay, so we will do that with an account. Then sold investments for 10,000. Those investments cost only 2,000. That means something which I bought for 2,000 I sold for 10,000 and made profit of 8,000. Now by reading this, what you need to understand is this has got impact on your operating activities also. Why? Because while preparing cash flow from operating activity, any profit which you have earned by sale of investments or sale of any other assets, you should not take it there. Okay, so for that sake that will also impact here. Is that clear, everybody?
Yes, sir.
Cool. Now let's do it by ourselves. Last point in Norway Solova, I'll do once again. So I will solve the question for you here itself. Okay. So I'll prepare cash flow statement for you here. Please see. Particulars. Inner amount column, outer amount column. Okay, your starting point is net profit before tax. You are starting with cash flow from operating activities. Okay, your net profit before tax is given there, which is 8,000 rupees, to which you are supposed to make multiple adjustments. First, let us take non-cash expenses. Non-cash expenses, he has given you about depreciation on building for 1,000, furniture and fittings 2,000, cars 5,000. So all put together 8,000 is your depreciation. This is supposed to be added back, hence 8,000 here. And then you have profit on sale of investment, which is identified here. Okay, sold investments for 10,000, investments cost is 2,000. So now in your operating activities, I think this question Ramnarayan, who asked me now?
Yes, sir, Rama, sir.
Nida. Okay. So you asked me regarding this, I'll explain. So whenever you have a profit on sale of investment or profit on sale of asset or loss on sale of investment or loss on sale of asset, there is this impact which goes in P&L. But right now you want profit which is purely from your operations, in which case you should not add investment sale profits or losses from sale of investments and all. Hence you are reversing them here. Okay, so already to the extent of 8,000 profit is in your P&L. Now you should reverse it. So which means from the existing profit, what should you do? You should add or deduct? Deduct. Okay, so less profit on sale of investment, 8,000 deduct. Okay, next, what other items do we have? Please see. So he says, he also says in the same question, one car was disposed during the year for 3,400, written down value is 2,000. That means he sold the car for 1,400 of profit. This also is a profit from investing activity, not from operating activity. So I should reverse this also. Okay, so let's do that. Less profit on sale of car, 1,400. Okay, so by doing this, what do you get? Cash flow before working capital changes. So how much is it? It is 6,600 here. Do you agree with me? Hello?
Yes, sir.
Then to this, what are you supposed to do? You should keep telling me answers. I will not tell. You should keep telling me answers. Come on, next step is what? What all should I consider here?
Current assets and current liabilities.
Excellent. Current assets and current liabilities. So out of these current assets and current liabilities, will you consider cash and cash equivalents? We will not consider. Only inventories, trade receivables, trade payables and short-term provisions are supposed to be considered. Let's do that. Inventories. So how much is it? Inventories. What happened to inventories? Inventories increase from 8,000 to 14,000. So what happens? Will my cash decrease or increase? What is the relationship between current assets and cash flow? Inverse relationship. Inverse relationship. So 14,000 is what it increased to. So there would be 6,000 of positive or negative here? Negative. 6,000 negative. Next. Trade receivables. From 6,000 it has become 8,000. Here also it would be negative only. Okay. Then cash and cash equivalents you will not consider. Trade payables. What would you do? Yeah. You are supposed to add. Why? Because from 5,000 it has become 8,000. So here you held the cash without paying the creditors. Okay. So trade payables would be 3,000 add. Next, with respect to short-term provision, if I don't know anything about the details about those short-term provisions, I would have considered that as it is. But here he says it is specifically about taxation. So with respect to tax, anyways, we are going to do elsewhere. Yes or no? Income tax paid is something which we will do. Hence, you need not consider it here. Okay. Now, at this juncture, what you get is called as what? So at this juncture, what you get is cash flow before extraordinary items. You don't have any extraordinary items. Please tell me what is the balance here. So it's going to be 1,600 if I am not wrong. Correct?
Yes, sir.
Then you have taxes paid. Taxes paid would be, you can prepare a quick account for provision for taxes. Okay, provision for taxes. Opening balance you have 4,000, credit balance, and closing you have stated that 7,000, and you also know this year the provision created is 7,000. That means the amount of tax which is paid in the current year is 4,000. Okay, So this is basically your tax payment. So you can consider 4,000 here. And finally what you get is cash flow from operating activities to the tune of 2,400. It is negative, by the way. Am I making sense, people? Can we go forward? All right, let's move ahead. We will go to investing activities. Cash flow from investing activities. So what all investing activities did we see till now? You know that there is some assets purchased, furniture is purchased, cars are purchased, okay, investments are sold, like this. Investments are purchased and all. So let's first take purchase of investment. It is for 6,000 negative. Sale of investment, it is for 10,000 positive, right? And then what else do we have there? You have some furniture and fixtures. Let's prepare an account for furniture and fixtures. Opening balance is how much? Hello? Opening balance is 22,000. And he says current year depreciation on furniture is how much? 2,000 rupees. Okay. And closing balance, he says it is 34,000 rupees, which means in the current year you made purchases to the tune of how much? 14,000. Yeah. So 14,000, this is your requirement here. Okay. So let's do it. Purchase of furniture, it is 14,000 negative. Apart from that, what else has happened? With respect to cars also, multiple transactions have happened. Let's do an account for cars also. Okay. Opening balance in cars account is how much? 16,000. Closing is 25,000. And current year depreciation in cars is how much? It is 5,000. All right. So apart from this, what else did he tell you about cars? He sold a car for 3,400. Yes or no? Hello?
Yes.
Now, would you take 3,400 here or 2,000? Hello?
3,400.
If you take 3,400 here, you will have to take P&L. Yes or no? You will have to take profit of 1,400. Where will you take? On the debit side or credit side? What is the entry if you sell car? Hello? What is the entry if you sell a car? Bank account debit 3,400, to car account 2,000, to P&L account 1,400.
1,400 for P&L.
Sorry?
2,000 for bank account and 1,400 for P&L.
Yeah. So that means here you would have 1,400 for P&L profit. Okay. Then once you are done with all these transactions, you can see what is the balancing figure which would give you the value of purchases made. Okay. So take total on your credit side Credit side total happens to be 33,400. And on the debit side, balancing figure is how much?
16,000, sir.
16,000. Okay.
No.
So 16,000, this is basically your purchase of car. Okay. So now purchase of car is 16,000. Sale of car is 3,400 positive. So apart from this, is there anything else which is there in cash flow from investing activities? I think that's it. Okay. So please take total and tell me cash flow from investing activities. Can you please tell me the net impact? $30,000, $36,000, $26,000, $23,000, $22,600. Waste of calculators.
Sir.
You don't have time in your examination, man. Don't think that you'll have all the time for you to calculate. Next, cash flow from financing activities. Let's begin. So first of all, equity share capital, he has told you that it has increased from 1 lakh to 1,20,000 and he did not tell you any other information, which means that 20,000 is issue of equity share capital. Do you agree or not?
Yes, sir.
Next, reserves don't bother. Apart from that, what else has happened? Is there anything else which would impact here?
No, sir.
Nothing else apart from this? All right.
No, sir.
Yeah. So this is only issue. So it is 20,000 positive here. Okay. So with this, net cash flow is basically, guys, please mute yourself, everybody. Yeah. So net cash flow would be
5,000, sir.
5,000 negative.
Sir.
Yes, sir.
Okay, 5,000 negative, and then you need to do a reconciliation whether it is matching with your cash and cash equivalents or not. Now cash and cash equivalents, if you see, it is given there 17,000 opening balance, 12,000 closing balance. The difference is exactly 5,000 negative. So that means your problem is correct, your solution is correct. So let's do that. Reconciliation is also part of your presentation, guys. Opening cash balance, it is 17,000 less net cash flow 5,000, closing cash balance 12,000. Is that clear, people?
Yes, sir.
Yes, sir.
Yeah. Let's move to next question, a very simple question. Profit or loss prior to incorporation. The promoters of Shiva Limited took over on behalf of the company a running business with effect from 1st April 21. The company got incorporated on 1st August 21. The annual accounts were made up to 31st March 22, which revealed that the sales for the whole year totaled 24 lakhs, out of which sales till 31st July 21 were for 6 lakhs. Gross profit ratio was 20%. Expense from 1st April 21 till 31st March 22 were as follows: salaries, rents, rates, insurance, sundry office expenses, travelers commission, discount allowed, bad debts, director fees, tax audit fees, depreciation on property, plant and equipment, debenture interest. So these are the details which are given. Prepare a statement showing calculation of profit for the period, prior period and post incorporation period. Now you should tell me the basis for each of these. First of all, tell me from which date to which date is pre-incorporation period and from what date to what date it is post-incorporation period. Come on, people. Hello.
From 1st April to 1st August, it was pre-incorporation, sir.
Excellent. Okay.
Time
From
ratio
1st August to 31st.
Yeah. So first of all, timing, if you see from 1st April 21 to 1st August 21, that means how many months is it?
4 months, sir.
4 months is pre-incorporation period and 8 months is post-incorporation period. Good. Now, he says sales were 24 lakhs. Correct? And he says profit is 20%. So, sales, though it is 24 lakhs, he says the sales till July 31 were 6 lakh rupees. So, does this have any impact or not? Hello? Yes, this is pre-incorporation sales, okay? And then post-incorporation sales would be considered as 18 lakhs, okay? And out of this 6 lakhs and 18 lakhs, he has clearly told you what your GP is also, 20%. So that means you need not start with sales also, you can directly start with gross profit also, there is no wrong, okay? Even if you do it from sales also, that is absolutely correct. So your presentation starts with sales, okay, sales, pre and post you would take. It is going to be 6 lakhs and 18 lakhs less, or you can directly take GP at 20%. It is how much is it? 1 lakh 20,000 and here it is 3 lakh 60,000. From here you can start, okay? Now tell me salaries on what basis will you take?
Time ratio.
Time ratio, good. Okay, time ratio. Rent rate and insurance, time ratio. Sundry office expenses, time ratio. Travelers commission, what ratio? Sales, very good. Discount allowed, sales ratio. Bad debts, sales ratio. Director's fees, very good. Post, very good. Next, tax audit fees,
Sales ratio.
very good. Sales ratio. Now, if he gives you stat audit, what will you do? Post. Okay. Depreciation, time ratio. Debenture interest, only post. Why? Because debentures will not be there in other than corporates. That's why. Okay. So this is how you do, and at the end of the day, you will get some profit before and profit after tax, profit post incorporation. To the extent of profit before incorporation, what would you do with that? What would you do with the profit before incorporation? Capital reserve. Post incorporation profit would be taken into P&L. That's all. Excellent. Next. Now, yeah. Next question is about bonus shares, bonus issue. He is asking us to write journal entries. Let's see what they are. Rise Limited with subscribed capital of 7,50,000 consisting of 75,000 equity shares of 10 each, called up capital 7.5 per share. A bonus of 1,87,500 declared out of general reserve to be applied in making the existing shares fully paid up. Now what is he trying to do? He is trying to give that balance 2.5 as bonus itself. Okay. So what entries should I pass is the question. Hello?
Sir.
Yeah. So what you can do is, so 75,000 shares are there. 75,000 into 2.5. How much is it? Please see whether it is equivalent to 1,87,500 or not, first of all.
Yes, sir.
Yes. So it is 1,87,500. This is clear. Okay. Now, first entry what you are supposed to do is you should debit general reserve and credit your bonus. Okay. Then this bonus will be considered as final call money settlement. Okay. So first entry what you are supposed to write is, I will write it here, please see. For creation of bonus shares, general reserve account debit, bonus to shareholders. It is 1,87,500, 1,87,500. Number 2, share final call. What is the entry for share final call? Hello? And share final call. Thank you, sir. Response பயங்கர ஷார்ப்பா இருக்கணும். Same amounts. Next, this share final call should be knocked off with that bonus now. Okay. Utilization of bonus against share final call. So it's going to be bonus to shareholders account debit to share final call. Same amounts. Is that clear?
Yes, sir.
Next. Second part. A limited company having fully paid up capital of 75 lakhs consisting of equity shares of 10 each had general reserve of 13,50,000. It was resolved to capitalize 7,50,000 out of general reserve by issuing 75,000 fully paid bonus shares of 10 each. Each shareholder to get one such share for every 10 shares held by him in the company. Now what would you do? You will pass again, the first entry would be the same, general reserve to bonus for 7,50,000. Okay, and then bonus will be given as equity share capital. Okay, so first entry would be general reserve account debit to bonus to equity shareholders for 7,50,000. Second entry would be bonus to equity shareholders account debit to equity share capital, same 7,50,000. I think it's very simple. I don't want to write it and waste the time for you. Okay, so this is the solution for this. Next, issue of rights. Meta Limited has decided to increase its existing share capital by making rights issue to its existing shareholders. The company is offering one new share for every 2 shares held by the shareholders. The market value of shares is 360 and the company is offering one share of 180 each. Calculate value of right. What should be the ex-right value of share? Now tell me, what kind of problem is this? Hello?
Calculations.
Rights calculation, huh?
Sir.
Okay. So you have this part of your group 1 or group 2? Hello? How many of you have attended my group 2 classes? How many of you have attended group 2 classes already or not yet?
Yes, sir.
Finished? Not yet. Okay. I'll tell you, this is basically a question pulled out of AS20, I would say. Okay. When we discussed AS20, for someone who has attended group 2 classes, they would definitely be able to answer this. This is a very simple calculation where you are supposed to calculate X interest price. X-rate value per share is supposed to be calculated. Whenever you have calculation like this, what you are supposed to do is first multiply your existing shares with value per share. Okay, so he says the company is offering one share for every 2 shares held. Okay, the market value of share is 360 and it is offering each share for 180 rupees. Okay, so you need to calculation of post rights share price. That is what he is asking you to do. Okay, how you are supposed to do is take numbers, okay, value, product, these three columns. Right now, for every 2 shares, the value is right now how much? 360 rupees. Yes or no? That means what is the product of these two? 720.
720.
Yeah. And for these shares, 1 share is going to be given for 180 rupees, which is 180 rupees. Okay. Now, take product of these two. It is 900 for 3 shares. What does this convey? Now, the revised value per share after this rights issue is 300 divided by 900 divided by 3. 900 divided by 3, that is 300 rupees per share. What has happened here? The value has fallen down from 360 to 300 rupees. Why did it fall? Because there is a small element of bonus inside rights issue. See, if somebody is given, an existing equity shareholder is asked to purchase for 180 rupees instead of 360 rupees, the remaining difference between 360 and 180, 50% difference, that is being paid out of my pocket only, no?
Sir.
Okay, so that is the reason your market value per share will fall down. He is asking you what is the fall in value only, that's all. This is the solution. Okay, so in your RTP, if you go through the solution, it will be a long calculation, but to keep it short, this is how you do. Calculate the value of right. What should be the ex-right value of share is also what he is asking. Now, value of right, if you see, value of right is basically 360 minus 300. Yeah, 60 rupees is the value of right. How did I get? See, what people generally think is the difference between 360 and 180 is value of right. No, wrong. You should look from the market capitalization perspective. What does market capitalization perspective mean? For the number of shares I hold in the company, what is that people are willing to pay me? 900 is what people are willing to pay now for 3 shares. That's all. So 900 is the market capitalization for 3 shares. So that means per share market value after rights issue is 300 rupees. So the difference between 360 and 300 will be your value of right. Is that clear?
Sir.
Yes, sir.
Okay. Now, so let's move to next question. Redemption of preference shares. Dheeraj Limited had 5,000 10% redeemable preference shares of 100 each, fully paid up. The company had to redeem these shares at a premium of 10%. It was decided by the company to issue the following: 40,000 equity shares of 10 each at par, 2,000 12% debentures of 100 each. The issue was fully subscribed and all accounts were received in full. The payment was duly made. The company had sufficient profits. Show journals in the books of the company. Now, this is a question regarding your redemption of preference shares. Okay, so how many shares is he redeeming? Hello?
5,000 shares.
5,000 preference shares is what he is redeeming. To redeem this, he is actually issuing fresh shares and debentures. Okay, so what you need to do is, to the extent of shares which are redeemed out of fresh proceeds of equity shares or any shares, I need not create CRR. Okay, but with respect to this 2,000 debentures what I am raising, no, by issuing debentures, to this extent I should create CRR. Why? Because there is not fresh issue of shares. Am I making sense?
Yes, sir.
Okay, so we need to see how much amount is available with the company by issuing this 40,000 equity shares. So by issuing 40,000 equity shares, company has got 4 lakh rupees. Okay, he wants actually 5 lakh rupees plus 10% premium, 50,000. 5 lakh 50,000 is what he wants, of which 4 lakhs is arranged out of equity share capital only. So that means the balance 1 lakh out of face value of preference shares being redeemed is not out of fresh issue of equity shares. To that extent, you should create CRR. Okay, so that is one important aspect you need to be cautious here. So entries wise, if you see, your starting point of entries would be, I would do it here, please see. First entry, issue of equity shares at par. Unless you issue, you cannot redeem, that's why. Okay, so for equity shares and all, you can write all the 2 entries, that is bank account debit to share application, again share application to share capital, or you can also directly write bank account debit to equity share capital, which is 4 lakhs. Second transaction is you are issuing debentures also. So debentures, how are you issuing? Is that at par or not? Yes, 12% debentures at, of 100 each. So for this entry would be bank account debit to 12% debentures. It is going to be, sir, please mute yourself, please mute. Guru Prakash. Okay, somebody is asking, shall we write the same as narration? Ramnarayan, what narration da? Actually, see, if you write heading, you need not write narration. Or if you are writing narration, you don't write headings. That's fine. Okay? Yeah. Third. Now you can redeem your preference shares. Okay? Redemption of preference shares, due entry first. So what would be the entry for redemption of preference shares? You have what percentage preference shares right now there? 10% preference shares are there. 10% preference shares account debit, 5 lakhs. Premium on redemption of preference shares, 50,000 to preference shareholders, 5,50,000. Okay. Then number 4, on payment, preference shareholders account debit to bank, 5,50,000, 5,50,000. Then number 5, you have the redemption of premium on redemption of preference shares. No, that should be knocked off against your securities premium or whatever profit and loss you have. Okay. So did he tell you anything about profit and loss or securities premium you have? So nothing is mentioned. I'll assume that it is knocked off against securities premium. On utilization of securities premium for premium on redemption, entry would be securities premium account debit to premium on redemption of preference shares, 50,000, 50,000. Fairly speaking, with this all entries are over. Okay, except for you need 5 lakhs of face value. Out of this 5 lakhs of face value, you paid 4 lakhs by raising fresh shares. Okay, so hence for this 1 lakh rupees, you need to create CRR. CRR creation. I'll repeat once again. Whenever you have redemption of shares, check whether that is being redeemed out of fresh capital or out of own funds or any other source. If it is by issue of fresh capital, you need not create CRR to that extent. Okay. Here you are raising 2 lakh rupees by issue of debentures. That is not fresh capital, that is liability. Okay. So, to the extent of 4 lakhs what you are raising as fresh capital, you need not create CRR. CRR, what is the main objective in creating CRR? You need to have a cushion. See, intention is, I don't want you to completely spend all the accumulated monies against redemption of equity shares or preference shares. I want you to showcase that you have that ability to save some monies for future also. Okay. So, to prove that you have that ability to save some monies for your future, you are creating this CRR. Okay. CRR creation entry, it is only for 5 lakhs minus 4 lakhs. That is 1 lakh rupees you are supposed to create CRR. It's going to be from say from P&L account. If I am creating P&L account debit 1 lakh to CRR 1 lakh. Is that clear?
Yes, sir.
So, these are the entries for preference shares redemption. Okay. Next, redemption of debentures. Let's read through this question, redemption of debentures as well. XYZ Limited had issued 1012% convertible debentures of 100 each, redeemable after a period of 5 years. According to the terms of conditions of the issue, these debentures were redeemable at a premium of 5%. The debenture holders also had the option at the time of redemption to convert 20% of their holdings into equity shares of 10 each at a price of 20 per share and balance in cash. Debenture holders amounting 20,000 opted to get their debentures converted into equity shares as per terms of the issue. You are required to calculate number of shares issued and cash paid for redemption of 20,000 debentures. So, this is a very simple question, okay, where he is asking you to calculate to what extent equity shares are going to be issued, to what extent you are going to settle that in your value in cash. Okay. So, what is the total debentures you have here? You have issued 1000 debentures. Okay. And these debentures are redeemable after 5 years. And he says if they are redeemable at a premium of 5%. Okay. That means for every 100 I am supposed to pay 105 rupees. And the debenture holders have an option to convert 20% of their holding into equity shares of 10 each at a price of 20 per share. So, at 20 rupees you will convert 20% and the balance will be settled in cash. Okay. So, debenture holders amounting to 20,000 opted to get their debentures converted into equity as per terms of the issue. Okay. You are required to calculate number of shares to be issued, cash paid for redemption of 20,000 debenture holders. Okay. So, first of all, I have 1000 debentures, okay, into 100. That means the value is actually 1 lakh. 1 lakh is the liability in my books. Do you agree? Hello?
Yes, sir.
Now, out of this, 20% are agreeing for equity. Okay. 80%, what am I supposed to do? I am supposed to give them in cash. Okay. So, yeah. So, number of debentures, if you see, number of debentures which have agreed for conversion into equity is, out of 1 lakh, it is going to be 200 debentures of 100 each agreed for conversion. Okay. Now, out of this 200 debentures, 20% will be converted into equity and the rest will be paid in cash. Do you agree?
Yes, sir.
Okay. 20% convert to equity, rest is cash settlement. Okay. So, to the extent of 20% out of 200, what is it? 40 debentures, yes or no?
Yes, sir.
Okay. So, cash settlement is for how many debentures now? For
160.
160.
160 debentures. Okay. So, for this 160 debentures, how much am I going to pay?
105, sir.
Emma? 160 into
105.
105 into 105 is what we pay. Okay. Now, for this 40 debentures also, for this 40 debentures, what am I going to do? For this 40 debentures, I am supposed to give equity shares. Okay. If they collect in cash, they would have got 105 rupees. Yes or no?
Yes, sir.
So that means the value happens to be how much? 40,000 or 4,000? 4,200.
4,200.
Okay. If they collect in cash, they would have got 4,200. Now what I am saying is, I will give them so many number of equity shares at a value of 20 rupees per share. That means 4,200 divided by 20 will give me number of equity shares to be issued. Am I making sense?
Yes, sir.
Yes, sir.
So how many is it? It is going to be 210.
Sir.
210 equity shares. Okay. So this is clear. Now for the remaining people, if you see 160 into 105, how much is it going to be? Yeah.
16,800.
16,800. Okay. And remaining 80%, what did they opt for?
Cash, sir.
Oh, actually he has asked you to calculate only for this 20,000 debenture holders. Okay. So for remaining also, you will pay 105 rupees only per debenture. Okay. So completely you would pay 105 rupees per debenture. We can do that calculation separately, not part of the question, that's all. Is that clear? Can I go forward?
Yes, sir.
All right. Next. Investment account. We have discussed this yesterday. We will quickly run through. Alpha Limited purchased 5,013.5% debentures of face value 100 each of Pergot Limited on 1st May 21 at 105 on cum interest basis. Very, very important. The interest on these debentures is payable on 31st and 30th March, September respectively. On 1st August 21, the company again purchased 2,500 of such debentures at 102.5 each on cum interest basis. The market value of debentures as at the close of the year was 106. You are required to prepare investment account in the books of Alpha Limited for the year ended 31st December 21 on average cost basis. Now, there are multiple important aspects to be discussed here. This fellow's accounting year is 1st January to 31st December. Second important aspect is the interest payment dates are 31st March and 30th September. The moment you see such situations, first thing what should strike in your mind is, in your interest column also there will be opening balance. Am I making sense or not? Sorry.
Yes, sir.
Okay. Why will there be oh, too much of I don't know whose that is. Now, why will there be amount in opening balance of interest also? Why? Because if it is a case where I have purchased them last year itself, as on December 31st, I would not have got money. I would not have got that interest to the extent of 31st December, because company will pay only on 31st March after September 30. In which case, I will have interest accrued but not received. Okay, to that extent, I am supposed to show in the closing balance and recognized as income in the last year, but you would not receive, hence you would show it as an asset. The same asset you are bringing here now. Okay, hence there would be an opening balance of interest earned but not received, in case these existed as on the opening date for the investor. Okay, now what is he saying? Alpha Limited purchased 5,000 13.5% debentures of face value 100 each on 1st May 21. Now that means on 1st May 21, if you are buying, it means that on 1st January 21 you don't have these investments at all. So that concept of interest accrued but not received will not come. Okay, so that is clear. But this fellow, he purchased at 105 cum interest. That means this is inclusive of interest. So I need to segregate the interest component out of this total purchase price and then account for that separately in interest column, and the amount of investment for the debentures in cost column. Okay, then interest on these debentures is payable on 31st, so and so. On 31st, on August 1st, the company again purchased 2,500 debentures at 205, again come interest price. Okay, on October 1st, company sold 2,000 debentures at 103 at X interest basis. So purchases are at cum interest basis, sales are at X interest basis. Okay, and market value of debentures on closure is 106. You are supposed to prepare investments in debentures in the books on average cost basis. Now, why did he tell you this average cost basis? Because you have a sale, you need to calculate cost of purchases or cost of debentures being sold. There you should apply average method. Am I making sense, people?
Yes, sir.
Yes, sir.
Now, having said this, let's prepare investment account. I will do as if you would generally do in your examinations. Okay. So date, particulars, face value, cost, interest, date, particulars, face value, cost and interest. Debit, credit, this is investment in what percent debentures this is? 13.5. Okay, let's do it. He is purchased on 1st of May to bank. How many debentures did he buy? He purchased 5,000 debentures. Okay, now let's do a working note. Working note 1, 1st of May purchases. Okay, so purchase price given is 5,000 into 105. How much is it? Hello?
5,25,000.
Yeah, 5,25,000. Is there any brokerage stamp duty which he has mentioned? Nothing is there. Okay, 5,25,000. Now from this you are supposed to deduct interest from what date to what date? Your interest payment dates are 31st March and 30th September. In this case, I am purchasing on 1st of May. That means after 31st March, 1 month passed. So to the extent of 1 month interest, I am supposed to show separately. Interest from 1st of April to 30th of April. Okay, 1 month interest is supposed to be taken. So it's going to be 5 lakhs into 13.5% into 1 by 12. Please tell me value.
5,000.
Okay, 5,000. Thank you. 5,625. So the balance would be 5,19,375. Okay. So this is supposed to go into cost column and this will go into interest column. Let's take it there. In cost column, 5,19,375, and interest column, it is
5625.
yeah, 5625. Even if it is not visible, please be cautious. Okay, I hope it is visible actually. Next, so after this, what transaction has happened? He purchased again on 1st August. Now between 1st August and 1st May, is there any other transaction which has happened? No other transactions. Okay, so you can directly take next transaction. First of all, this is working note 1. Next, 1st of August to bank, working note 2. Okay, so what is the purchase price again? Hello? What is the purchase price? 2,500 into how much?
102.5.
Yeah, 102.5. So what is the value?
2,56,250.
2 lakh
56,257.
Anyone, please don't mind, or else I'll calculate for myself. 2,500 into 102.5, 2,56,250. Thank you. So now I need to deduct interest. Why? Because this is also come interest basis. Interest from 1st of April to 31st of July. How many months is it? April, May, June, July. 4 months interest is supposed to be deducted. So 2,50,000 into 13.5 into 4 by 12. Yes or no? So 2,50,000 into 13.5% into 4 divided by 12. 11,250. So on deducting this, you get 256,250 minus 11,250, 2,45,000 as your cost. Okay, this will go to cost column, this will go to interest column. So here it is 2,500, 2,45,000 in cost column and 11,250 in interest column. Okay, any doubts?
No, sir.
All right, next, after this what has happened? After this, the next transaction what he told you is about is on October 1st. In between, on 30th September, there is interest payment. Okay, so interest payment we are supposed to take on 30th of September by bank. We are going to receive interest for 7,500 debentures. So I'll put it directly here, 7,500 into 100 into 13.5% into 6 by 12. You should tell me an amount.
50,625.
Okay, 50,625. Okay, in interest column. Then apart from this, what are the transactions are given? On 1st October, this fellow sold some debentures. Okay, 2,000 debentures are sold. Okay, so 1st of October by bank, let's do a working note 3. Working note 3. 1st of October, sale. Okay, sale price, how much is it? For what rate did he sell? He sold for 103 rupees. Ex interest price this is. Okay, 103 into 2000. So it's basically 2,06,000. Correct?
Yes, sir.
And interest, will there be anything? Nothing, because exactly on 30th September you received everything and after that you are selling off. Okay, so directly you can take it here. In face value column take 2,000 and in cost column 2,06,000. Okay, then what other items do you have to do? You will have to see whether you made a profit or loss on this sale. Okay, for this he told you to use average cost method. Okay, sale price is 2,06,000. Okay, cost of debentures sold is to be calculated. How do you calculate? It's basically 5,19,375 plus 2,45,000 whole divided by 5,000 plus 2,500 into 2,000. You should tell me. Come on.
Two lakh 3,833.
2,03,833 it seems. So that means I made a profit of 2,177. Yes or no? 67. Huh? 2,167 is the profit I have made. So to this extent of profit, in what column am I supposed to show? Cost column or interest column? Hello?
Cost column, sir.
Yeah, cost column. So let's do it. On the same day, 1st of October, to P&L in cost column 2,167. So with this all transactions are done. Okay, now you can close your accounts, because this fellow accounts closure is on 31st December. After this no other transactions have actually happened. But the problem here is,
Sir,
yeah,
sir, இப்போ ஒரு சேல் நடந்தா எப்படி சார் ஆவரேஜ் காஸ்ட் கால்குலேட் பண்றது? இப்போ ஒரு சேல் நடந்தா எப்படி ஆவரேஜ் காஸ்ட் கால்குலேட் பண்றது?
that is what we did here. No, if the sale happened now on 1st October,
இன்னொரு சேல் நடக்குது சார்.
if one more sale happened, again your cost would be the same. No, your average cost would be based on purchase only, right?
Sir, அப்ப கிரெடிட் சைடுல இருக்கிற பேங்க் அந்த
Illakana, so okay, fine. If you take these also, you should consider this P&L also then, if you are considering this sales.
Okay, sir.
Okay, and then do once again. Good question. Yeah. Now fairly speaking, all transactions we have recorded, but there is one inherent transaction. What is that inherent transaction? This company for which we are accounting is maintaining books of accounts based on 1st January and 31st December. But the company in which I invested are paying me interest on 30th September and 31st March every year. So there is a difference between these two. So what we are supposed to do is on 31st December, I should accumulate the amount of interest which I have earned but not received and show it in my interest column. Okay. So let's do that. On 31st December, by interest accrued but not received. So how many debentures right now I have? I have 5,500 debentures into 100 into 13.5% into how many months is it? From September, October, November, December, 3 months, 3 by 12. Please calculate and tell me.
18,563.
18,563 is to be shown. Okay. Once this is done, you can move it forward. Okay. Now, so to P&L, how much would you be transferring out of this on 31st December? To P&L account, you would be transferring all of this put together, take total. Okay. So it is 69,000. How much is it? Please tell me, calculate and tell me.
188.
188. Here the balancing figure would be how much? 69,188 minus 5625 minus 11,250.
52,313.
Okay, 52,313 is basically your interest earned during the financial year. That's why. Okay. Once this is done, you can take balances for face value and cost column now. Now, face value, if you see, you have a total of 7,500 on the debit side. Okay, on 31st December, by balance carried down, it is going to be 5,500. Okay. Next, cost column, if you see, it's going to be total of all of this minus 2,06,000. You first tell me what is the value. Hello?
5,60,542.
5,60,542. Okay. Now, did he tell you the market value he's mentioned as 106 rupees? Yes or no?
Yes, sir.
Now, this 106 rupees, if you see, 106 into 5,500, how much is it?
Like 83,000.
106 into 5,500 is basically
Yes, sir. 5,83,000.
5,83,000. However, you're on cost basis, you have got a value of only 5,60,000 something. Yes or no?
5,83,000.
On cost basis, it is 5,83,000. Yeah. Cost you have calculated, no, here.
Yes, sir.
How much is it?
5,60,543.
Yeah, 5,60,543. Okay. So lower of these two is what you are supposed to take. Hence you are going to take 5,60,543 only.
Okay, sir.
Okay, 5,60,543. So total of debit side, please tell and take it, and with this your problem is over.
Sir,
Yes.
Same, same.
that closing part I wish.
Sorry?
Can you explain the closing balance of that?
I'll do that one second. 1 second. So what I'm saying is, he has given you the market value of debentures at the end of the year. That means he is asking you to assume this problem as if it is a short-term investment. Any short-term investment, how do you value on the balance sheet date? It is either at cost or NRV, whichever is less. So you are comparing cost 5,60,543, which is basically nothing but your total of your debits, total of debits minus total of credits, which is 5,60,543. That you are going to compare with your market value, which is 5,83,000. Since your market value is greater than cost, you will consider only cost. Is that clear?
Yes, sir.
Now let's slightly change the question. He says, what if market value is 102? Let's do it. If it is 102 rupees, 102 into 5,500, how much would it be? Value please?
5,61,000.
5,61,000 or 51,000. Let me calculate for myself. Okay, still this is greater, in which case you would go by cost only. So let's take 101 rupees. Okay. So if it is 101 rupees, 5,500 into 101 gives you 5,55,500. Okay. Now your NRV, your market value is lower when compared to cost, in which case you will go by 5,55,500 only. Here instead of 5,60,543 you will take 5,55,500, and the difference between these two you will charge it off to P&L. You will also get by P&L here. Am I making sense? Okay. So this is how you do in case you have NRV lower than cost. Yeah, there's somebody who has asked how you are supposed to solve this problem in examination. Is it supposed to be done under vertical method or horizontal method? My view, any problem, as long as it is something which you can fit in a vertical method, please do it like that. Problems like this which will consume more space, please do it landscape. Okay, please do it landscape, that is on a horizontal mode. That is fine if you do, but only request is don't do that horizontal in multiple pages. Okay, so I generally tell this in the classroom also. Say for example, if this is your booklet, and your page opens like this, in which case if you are starting here, do it like this: date, particulars, face value, cost, interest, again so and so. But don't do it like date, particulars, face value and all, again date, particulars, face value and all. Don't do that. Only do it landscape like this. It is fine. Okay, and ensure that your entire problem gets finished in this one side itself. Okay, that alone, please be cautious. Okay. Next.
sir.
Yeah. Next, we will.
Sir, please show the sum, sir.
Problem.
For once.
Yeah, sure. I'll do that. I hope it is visible.
Yes, sir. Okay, thank you, sir.